We entered after our cross, and as you can see, the market instantly moves into our favor, and then boom. Today I'm going to show you a strategy with amazing profitability rate that you can start using instantly. This strategy is simple and easy to use to make money in the financial markets. This strategy involves using exponential moving average indicator. You will need two moving averages on the same chart to give you a signal for entering into buy or sell position. Here you can see my recent two trades that I took in the financial markets. Both of these trades were sent to my VIP community where members can follow my trades and make profits as I do, and I was using the exact same strategy that I will show you today, along with other tools and other strategies that I developed. First thing that you need to do is open your trading software. I personally use TradingView. I think currently it is the best on the market. Second thing that you need to do is go to your indicators on whatever platform that you're using. Then type in moving or moving average, and you will see probably a lot of different moving average indicators. We have moving average convergent divergence, we have moving average ribbon, and the one that you are interested is moving average exponential. Select the indicator and press on it 2 times, and you will see that now you have 2 lines on your chart. This strategy consists of 2 exponential moving averages, and one has to be shorter. I personally use length of 8, and style doesn't matter, you can use whatever you want. This will be the signal line, so I put it as a red because for me it's more comfortable. And then when you move on to settings of the second line, it has to be a little bit longer. So on length, what I do is put length of 14, and in terms of style, you can leave it as blue or whatever color you like. Now, after you set everything up, this is how your chart should look like. You should have 2 different EMA lines which are crossing from time to time. And basically, in terms of time frames, you can use it on whatever time frame, and you can use it on whatever pair you like. Now let's talk about market conditions and in which market conditions you should use this strategy. You should use this strategy in trendy markets. That means when the market is either trending up, or oppositely, when the market is actually moving downwards, it's trending downwards, and we have a bearish trend. The third market condition that we also have is side moving market. As you can see over here, the market is moving sideways with no clear direction, and this is the market condition that you should definitely avoid when using this strategy. If you will be using this strategy in side moving market or consolidation conditions, you will get a lot of false signals and you will probably lose money. And now let's discuss how this strategy should work. So basically, you have 2 exponential moving average line. One is shorter, which is the signal line, and the other one is a little bit longer. So when the signal line crosses the longer length EMA, that is a signal for you to open a position. If the cross happens to the upwards, the signal line crosses from the bottom to the top, that means that we have a signal to open a buy position. And when the cross happens from top to bottom, the signal line crosses the other line, that means that we have an indication that we should open a sell position. Now this strategy is very simple, it's easy to understand, but it is really powerful because it shows momentum of the price, and you can use the momentum of the price to locate where could be the best position to entry and then profit off of that. Now let's see how this strategy works in action and how you can combine it with other tools. So the first thing that you need to do is identify the market conditions. Over here we can see that the market is moving downwards. If we look at the highs of the price, this high is lower than this high and this high is lower than this high. So if we draw a trend line and compare the highs of the price, we can see that the market is definitely moving downwards. That means that we can start applying our strategy and wait for the cross to happen. And so over here we can see that we have got our first cross right here, and that is an indication that we should open a sell position. We entered after our cross, and as you can see, the market instantly moves into our favor, and then boom, it hits our take profit, and we made simple and easy profits in the market. But remember that this strategy is not that simple. It also has its own rule, and the main rule is that you never take signals against the major market structure. So if we have a market that is moving downwards, that means that you should never open buy positions. And if the market is moving upwards, that means that you should never open positions into the sell. This is really important to understand because it will save you a lot of time and money. If we look over here, if we would have opened a position right here, we could see that probably the price wouldn't hit our take profit and just continue downwards. But because it is a downward structure, we opened a sell position, and as you can see, we profited with the downwards moving structure. Thank you guys for tuning in. Hopefully you guys enjoyed this episode. We do a lot of these in the channel, so you can check my other strategy videos or my supply or demand videos. So basically anything that you like you will find on this channel, so consider leaving a like button, subscribe, and see you in the next one.